Today I'm gonna walk you through one of my strategies that made me in only 3 days over $500,000, and you will not believe how stupid this strategy actually is. 17.44% on this specific trade here this month, and then my profit 4.86 Bitcoin, which equals roughly to $500,000 in only 3 days here. You see here the trade was closed on the 6th of October and I opened this trade on the 3rd of October. My name is Alex from AMCrypto. I'm a professional trader. I'm doing this already for roughly 10 years now in the crypto space, and I update everybody with daily live streams on this. But now let me explain you how I was able to make $500,000 in a little bit more or less than just 3 days. And you don't need to take my word for it. I'm gonna show you right now proof that I actually did this. Look here on my BYBIT account. 17.44% on this specific trade here this month, and then as you can see here 4.86 Bitcoin, which equals roughly to $500,000 in profit. And with the price fluctuations, it's always a little bit more, a little bit less, but kind of around that number. And again, in only 3 days here, you see here the trade was closed on the 6th of October and I opened this trade on the 3rd of October. What is this strategy that I used to achieve that, and why is that strategy so simple that even you as a beginner that has no clue about trading can manage to pull something like this off? Let me explain. The strategy that I use for that is called the Golden Cross strategy. The Golden Cross strategy combines the 50 and 200 simple moving average, and when the 50 is crossing over the 200 moving average, that is considered a Golden Cross. So, but what is exactly a simple moving average? A simple moving average is a line displayed on the chart here and is averaging the price of the previous price action. So now for 50, on the 50 moving average, that is over the last 50 days the average price, and on the 200 it's for the last 200 days the average price, and both are plotting then a line on the chart. So when these lines are crossing here, when the 50 is crossing over the 200 moving average, that is then a Golden Cross. So here you can see in white we have the 50 moving average, and then in blue the 200 moving average. Both lines together on the chart, as you can see here, running parallel to each other and are crossing on multiple occasions, either to the downside or to the upside. Now we are focusing for this strategy only on golden crosses. So when the white line is below the blue line and is going over the blue line, that's what we are looking for. So, and here you can see as an example one golden cross. So the white line, the 50 moving average, goes above the blue line, the 200 moving average. And once again, this is called then a golden cross. But we are focusing for now only on our golden crosses. So here as an example, we have a golden cross where the 50 moving average was below the 200 moving average. The 200 moving average is again in blue, the 50 in white. We are below the 200 moving average with the 50 crossing over the 200 and creating a golden cross, which leads to a rise in price. So we have, of course, not only one occasion here, we have multiple occasions where that actually happened. Now, what is wrong with this chart? Because one golden cross is not a proper golden cross. And you can see that here with the one in red. So that would have been a false signal. And how can you identify these false signals? Really easy. And when the golden crosses are happening, what you want to see preferably is that the golden cross starts to create upwards momentum and price, sharp upwards momentum to the upside for the price action, like we can see over here, also over here, and also over here. And here we kinda stayed around the same range and then broke below that, and only afterwards got a proper break to the upside that we could have been able to trade here. Now when we are trading golden crosses, we are targeting previous highs of the prior candle. So here in this instance, on this first golden cross, we would have targeted this prior high of this candle here, and you see we would have hit that with sniper accuracy. We continue this with the next one. Here the next one, all the way from down here all the way up there, because still this is the highest previous candle now that we have. So we would have targeted that one. The following one would have targeted from here this one, and here we would have targeted this high. So what would have had translated into percentages? In percentage terms, the first one would have gotten us here roughly 11%. The second one would have been our best performing one, that would have been 30%. And then here only 4%, but you could have maximized that if you would have trailed your stop loss. So by trailing your stop loss, you would have made sure that if the price turns against you, that you would get stopped out in profit. So initially, your stop loss would have been most likely been down here. And then once you would have entered this trade here based on the golden cross, you would have started to trade it up. I personally trade this up on Bitcoin every $1,000, $2,000 to make sure that if I get stopped out here, that I actually walk away with money. So and if you would have traded this up exactly in that fashion, you would have reached definitely the top side of this candle here, of that range, and you would have maximized the profit by 11.2%. So and the last one was here 9.74%. That we could have banked here on that specific setup. This signal over here was a fake out, as I just mentioned. So, and once again, when you see a fake out, or to spot a fake out is quite easy in my opinion, because you see price usually starts rising sharply to the upside after a golden cross. But here this was not the case. So we kind of stayed in the same range and then declined, broke below that, then we got the proper golden cross, and then we moved to the upside. Now, when you want to make trades like this, you need to understand that the time frame that you are trading on defines on how many golden crosses you're actually seeing or not. So there's golden crosses every single day, multiple times on the chart, but the lower the time frame, the less reliable they become. So you want to make sure that you are trading on a time frame where golden crosses are reliable, because now in my example, we are trading on a daily time frame. The success rate of golden crosses on the daily time frame is roughly 80%. If you're trading on a lower time frame, on a 4-hourly time frame, the success rate is still around 65 to 70%, but the lower you go, the less likely the golden cross is going to succeed. If you go already down to the 1-hourly chart, then we are dropping to 45 to 50% success rate, which is still pretty good, but a daily time frame with 80% is way better, of course. So and now I want to show you in an example, if you would have used here $1,000, what would have happened with the returns on the daily chart. So let's say you would have started with $1,000 or even with $10,000. On the daily chart here, the first percentage was 11.12%. So we write this down, multiply that with the leverage that we would have been used here. So I would have used here like 10x leverage on that trade. 10x is more or less always safe. But if you feel more comfortable with less, you can do less. But I would have used here 10x in this example. So we would have made here 112% actually on this specific trade. Now with 30%, that would have been 300%. Again, 112%, and then 97%. Now, when we are adding this all up and take in consideration that we would have compounded our winnings with the initial deposit, then we would have achieved here with only $10,000, $266,415, which is absolutely massive. So what this really shows you is that even with a really simple, a really stupid strategy, you can achieve here really big numbers, really big outcomes by just compounding your initial deposit with the profit that you made and keep rolling that over. If you like that strategy, guys, then please leave a like or subscribe to the channel, and I will keep the strategy coming for you.